Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in and take a look at Bitcoin's daily analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help me spread my easy to understand analysis so others, especially those who are new or those who don't want to do their own analysis, stay informed and make better decisions. To do that, you can smash the like, ring my bell to get notifications, or hit subscribe if you haven't, and then share your thoughts in the comments below. That will help the YouTube algorithm spread the analysis. So, pretty simple stuff. All right, let's dig in and take a look at the news, and then we'll dive into the analysis. I need my mouse pointer highlighter. Here we go. According to Cointelegraph, the SEC approves Valkyrie's Bitcoin future ETF. And this application is the same one that Teucrium's Bitcoin futures ETF was approved upon. So this is the same 33 Act that Bitcoin's spot ETF have been applied and keep getting rejected. So like I mentioned, I think it was yesterday where I mentioned that the SEC kind of spelled out in quote unquote fine prints that they want the ability to verify investors. And for the spot market is filled with, it's more decentralized than it is centralized. So that makes it challenging. I'm sure they'll figure it out, but we'll see what happens. Grayscale has mentioned that they could potentially sue the SEC if they're approving futures ETF under the same act as the spot ETF application. So we'll see how that plays out. Oh, that was one more news here. Bitcoin Magazine reported that a house in Portugal was sold for 3 Bitcoins in the country's first ever direct transaction. What they mean by direct transaction is that there was no intermediary party that acted like, for example, they didn't convert Bitcoin to euro and then bought the house. Well, it's actually an apartment, but it was direct. There's no middle conversion at all. So that's pretty cool. It shows more adoption. Here's the current crypto market heat map. There's some more greens here. That's looking better. Bitcoin went up a little bit. It's still down though. 1.13 down. Dominance 41.38. Sitting at 36.1K. Ethereum 2.7K down 1.52, dominance 19.65. Still pretty decent dominance there. Better. It's looking better. Still mostly red. Ooh, what happened to I have one more I wanted to share. I want to share the hang on. Might have erased it or something. That's what I want to share. The crypto market cap currently is $1.66 trillion. It's still down in the 24-hour of down 0.93, I believe. Is it 83 or 93? Hang on. Yeah, 93. 0.93, 92, I mean, 0.92%. 92 basis points down. Here's Bitcoin. Market cap, it's $687.4 billion. Wait, that's not 6, that's an 8. Is that an 8 or a 6? 6. No, it's a 6. 687. So if you look at Bitcoin here, 24-hour, 7-day, 30-day, 60-day, 90-day, all down. Kind of ugly, huh? All right, let's take a look at the daily charts here on TradingView. Bitcoin printed the second bearish descending smaller body daily candle here. It's got a long wick down to here. I drew in a lower low trend line here just to see what it's going to do in the next candle. Yesterday analysis, I mentioned that BTC is likely to chop between 37.5. 37.5 is this red line here. That's the resistance. And the chop between that and the 35 support line here. It kind of did that more towards the bottom half, because it put in a high of 36.7 and a low of 35.3. So, not too bad. And it had a longer wick down here that went almost went to touch this lower low line here. BTC continues to crush the bottom Bollinger Band. Here's the blue bottom Bollinger Band. It's just pushing right through it and wicking through that too. Even the body is below the Bollinger bottom band. And that Bollinger bottom band is at 36.3K right now. Bitcoin has been below the Bollinger basis line, which is this middle line here. And that middle line is currently at 39.2K. And it's been the daily candles have been down below that for 31 consecutive days. It tried to bounce up here, but it didn't make it. Bounce back down. So 31 days in a row that it's been down below that. And in previous times, 12 and 38 days were the high periods. The recent periods where it's been below the Bollinger basis line. So it's getting up there. I'm curious if it will break this 38 consecutive day period. It's 1 week away. Bitcoin remains bearish under the 50-day moving average, and that's this reddish line here. And that red line is at 41.8K. And the bull market support band, the grayish band here, that has a range of 41.8 to 42.8K, is below that too. So Bitcoin remains in the bearish territory still. Notice that it dropped below the descending channel. These two, here's the descending channel resistance, and the below that is the descending channel support, and it broke below that and stayed below that. That's even more bearish. So breaking this was bad, and it remained below that. That's bad. So that's very bearish. The nearest support would be the 35K line here, and potentially this lower low line here. This lower low trend line is temporary. I want to see what it's going to do, whether it's going to put in another lower low in the next candle. If it does, then I'll leave it and then use that as an indicator. And the resistance would be the nearest resistance would be this area of confluence up here. Oh, that's where the Bollinger bottom at 36.3K, the descending channel support at 36.9K, and the 37.5 support resistance reddish line here. So that's the next area. That's the area of resistance. A lot of confluence there. And confluence just means that those are the trends that traders tend to look at where they may enter or exit. So, all right. The previously traded volume at this range, it might be hard to see here, but it's a third of the max high. The max high is right here at around 38.8K, somewhere around there. This solid red line across here, that's the highest volume traded price level. Now it's right down here, and so it's about like a third of it. The daily volume has been popping. The past 3 days it's been way above the moving average, especially the last 2 days, today and actually today and the previous day. But the fourth and the fifth day beyond that, these two end candles here, they were just slightly above the moving average. So volume, it's daily volume is picking up, and it seems like this area down here is pretty active. It makes sense. You have the highest trading volume level here. That's where this big body candle from yesterday range around, and then down this area. So it makes sense. Let's take a look at the indicators below here. We have the white J line of the KDJ continues to trend down below the blue K and the red D lines. I gave that a bear. The white J line registered at 23, and 23 is just above the start of the bottom zone, which starts at 20 and goes below. And you can see back here that it can drop to as low as 15 for the J line. For the MACD, the white MACD line continues to trend down, registering at negative 1,184. And it's below the red signal line, and printed the 31st of 32 bearish histogram bars. Ooh, I think a new candle just appeared. And I gave that a bear. The RSI and CVD, the red RSI line down here, and CVD continue to trend down, but it's more at a flatter slope. The red RSI line is at 37, and I gave that a bear because of the downward trend. And the blue CVD line is at 1.806 million. I gave that a bear also. But you might want to say that's bear and a crab because it's trending sideways, but we'll see. And the MOM indicator was at negative 2009. It was here. It just flipped down. Yeah, so we just went over to this next candle here while I was doing it. So we have new trends down here, but it was moving up. And so, yeah, anyways, I gave that a bull for the MOM indicator. And so overall, what am I seeing on this chart? I gave it two crabs and a bear. It's going to be choppy in this zone here, between the, it's going to continue to chop between 37.5 and 35K, but it's going to hang in the lower zone. So 37.5 is this red line here. I believe it's going to range right between this level here, which is the descending lower low trend line, and the descending channel support line. It's going to chop between there. And also back here, when it indicated that the momentum was going up while the other two were going down, the RSI and CVD, they were going down while MOM was going up. That's that divergence. What I think is going to happen is it's going to have a longer wick, bottom wick, or a longer top wick. Unlike this candle, red candle here for today, it had a tiny short upper wick and a long bottom wick, meaning there was buying pressure pushing it up. So I believe that the next candle will have a longer top candle or a longer bottom candle because of the divergence with the MOM. More likely a longer top candle. So bearish pressure still, but we'll see. Well, I think you already see that it's kind of it's coming in slightly white here, so it could be a bullish candle, but it could be bullish and push up, and then it gets pushed down again, creating a longer wick on top. That's what I think may happen, but we'll see. Right here, and also expect a potential short liquidation. Oh look, it turned red again. A short liquidation, because I'll show you on the liquidations level map. it's building up. It's up at $8.7 billion on shorts right now. And so around 10 or so or higher, someone might take the counter position and move the price up on the spot market to make money on the perpetual futures high leverage position. So usually that happens after some period of consolidation, but we'll take a look at it. So let's do it. Here's the options max paying price. The 7th will be 36K. The 8th will be 36K. The 13th is 39K, and the 20th is 38K. So we're looking at between 36 and 39K. And these prices do change as the day come closer, so keep an eye on those. And you can find these charts for free on levitas.ch. And here are the volume and open interest by expiration. Volume are contracts that have been negotiated, already completed, and open interest are contracts that are pending and not filled yet. You can see here for the 7th, and there are more put contracts already completed than calls. Put contracts are contracts that options contracts that allow the investor to sell, but not, the option to sell, but not the obligation to. So it looks like they took that option to sell. And here too, on the 13th, similar situation, but more volume here. So if you go to open interest on the 7th, 8th, 13th, and 20th, there's not a lot of open interest right now. So usually higher open interest can indicate that the price may move, more likely move towards max paying price. But right now it's pretty low. So here's the heat map for Bitcoin. We got sell walls on top. Not a lot of big sell walls up here. The biggest one is the around 50K, which is still not that big. It's pretty light blue here at 193 in size. Down below we have buy walls, and 35K is still there and it's holding steady, even though Bitcoin wick down near it. It stayed and absorbed it. So that most of that wall is legit. Down here we have a bigger band at between 33 and 32K, and notice that band only came in roughly around May 5th at just before 11 a.m. Pacific Standard Time. 30K buy wall is still there and getting thicker and growing in size. And then we have some little ones down here at 25 and 20. Those have been there for some time, but they're small. And as far as in the cumulative volume delta or CVD, it's in this range since May the 5th at 5 a.m. Pacific Standard Time. We have a period where it was more aggressive market sells, and then starting on May the 5th at 1700 hours, pretty much more aggressive market buys. And you can see here it's about 2/3 of the way aggressive. Max aggressiveness would be down at this meter here for buys. Liquidation levels, as I mentioned earlier, here we have high leverage for 20x to 100x only on Binance, but it gives us an idea of what the market is like. So right now we see negative $8.7 billion difference. So this is the cumulative liquidation levels delta. What this means is we take the high leverage short liquidation levels, the money in these levels up here, these short levels, minus the money in these levels for the longs down here, high leverage long levels. Then we get the difference, and this represents the difference. So at around 8.7, that's building up, and historically around 10 or above, or when it approaches 10 or above $1 billion. And after a period of consolidation, that means that it could crab sideways. Usually, someone takes a high leverage position on the perpetual market that's counter to what the retail traders are doing. And so they take a high leverage position there. They go to spot market. They buy Bitcoin, driving the price up, and then liquidate all these retail traders. And then they collect their winning on the perpetual futures market. And then usually they dump it. They dump it back again once the price goes up. So they make it both ways. They make it money on the spot market, and they make money on the perpetual futures market where they're high leverage. But they do make more on perpetual futures. So expect that to come. I'm not sure when that's going to come, but you can keep an eye on this and just watch the consolidation. And that is it for our Bitcoin news and chart analysis. I appreciate your time, and I would appreciate it more, a lot more, if you could help me spread my easy to understand analysis by smashing that like. Really smash it. Ring my bell if you haven't, so to get notifications, and then hit subscribe if you're not already subscribed, and share with me your thoughts and comments and suggestions, recommendations in the comment section. Peace, and this is my third video for the day. I have one more left, and that is for Phantom weekly chart analysis. So I'll see you in that one. Peace.